Okay, good afternoon, everybody. Welcome to our panel discussion. We speak on wealth management today, and specifically on AI-powered, AI-native wealth management solutions. So we've got a great panel with me, and what I thought I would do, maybe first just a little introduction for everybody. So Felicia, if I can start with you, please.
Hi everyone, I'm Felicia Meyerowitz. I'm co-founder of Engage Smarter AI, which provides customer service agents quite complex, integrated with retirement calculators, and just been acquired by our largest client, Mercer. And I'm also a non-exec director on an investment platform that powers a few of the very large-scale pension propositions that you see in the retail market.
Hello everybody, my name is Phil McGaw. So I'm the Chief Technology Officer of a company called WealthWizards, which is part of the Royal London Group. So we build financial advice and guidance digital tools for customers.
Hi everyone, I'm Vivek Madlani. I'm the CEO and co-founder of MultiplyAI. We provide solutions to firms to launch digital hybrid advice to their customers or supercharge the productivity of their existing advice teams.
Good afternoon from my side as well. My name is Tamara Kostova. I am the founder and the CEO of AllVesta, a passionate advocate for more people investing. So what we do is we are building the AI infrastructure to activate savers into long-term investors.
Thank you very much. And my name is Susanne Chishti. I'm the founder and the chair of FinTech Circle. FinTech Circle, we are an investor network, so we invest in FinTech startups. And we also just launched our FinTech Circle board program for those of you who have got long experience in financial services and want to join FinTech boards as board advisors, non-executive directors, chairs, or SITs as well, so senior independent directors when it's a listed FinTech company. And today we dive into wealth management and into the trends we see in the industry and how it has changed over the last 7-8 years. I was just saying before when we spoke in the speaker's room that about 7 years ago our book came out on the topic of wealth tech, where we talked about how technology is changing and impacting the wealth management sector. So how have you seen changing the landscape and who are the key players? How do you look at that, Felicia? If I start with you, please.
Yeah, I think we've all seen a fundamental shift. If we start with the obvious, like the neobanks, like a Revolut. 7 years ago, they weren't even really playing in this space in the way that we see. And then when you start moving to similar players with very high engagement rates with the end consumer, like the trading platforms, Trading 212, Free Trade, and so on, and they also are starting to move more into the investment, long-term savings kind of market. And then obviously we've got the core distributors who are still there, advisors, and the big banks and so on. So it's going to be interesting the next few years to see whether the incumbents land up playing or whether they just become product and custody at the end of the chain.
Good point. Tamara, what are your thoughts?
Most probably I wanted to start with sharing with you what means a wealth tech. It's a disruptor in the wealth management space, a disruptor who is actually trying to change the status quo. So what we're seeing over the last couple of years, and we have been discussing it as well, is that we are seeing the emergence of new players that are trying to ultimately democratize either the access or the level of services that customers are receiving or that have not been receiving. I actually think that in terms of the layers within the wealth management space, we are starting with the infrastructure layer, and what we are seeing that this is becoming more and more commoditized. If you look at some of the players emerging, building API brokerage infrastructures like Drive Wealth or AllVesta, these are players that are completely, ultimately building a utility within the infrastructure space. And on top of that, you have the intelligence layer, everything around data intelligence and how do we try to engage with consumers. But what is missing is the experience, engagement, and activation layers. So we have seen asset managers trying to play beyond the distribution space, like when they're trying to build an engagement layers. And over the last couple of years, these initiatives have all been kind of lacking speed, lacking adoption. So if you think about the various layers, what we are really missing is the proper propositions within the activation engagement layer.
Very good thoughts, and I think this hopefully helped you to understand the macroeconomic environment in our sector. Let's look now as next step at the microeconomic, at the organizational level. And I want to ask Vivek and Phil, how could a wealth manager, an AI native wealth manager of the future be organized? You know, what is an org chart of the future? How will it look like? So if I start, Phil first and Vivek afterwards.
Yeah, sure. Quite a lot to unpack on really on this one. So I think a lot of firms are organized around like human-centered processes with probably AI bolted on afterwards. And so the most practical model right now is to have a human in the loop for safety reasons more than anything else. I think what we're starting to see, though, is moving from just instruction-only AI, which is, you know, question response, which you see, more into more into like outcome-oriented tasks, more complex activities and a workflow that can kind of drive things more. So I think what you're starting to see is more of like a flatter organization structure, I think, where you'll see the convergence of roles. Whether or not it is, and I'm seeing it in very interesting aspects in the software engineering space, but especially in the advisor space as well. So, do you want to build anything on that?
Yeah. So when we think about it, we work backwards from the propositions that are out there in the market and how those are evolving. And I'd agree with Tamara. We're seeing a lot of innovation across distribution and manufacturing, but really a ton around distribution. I think that's where we're seeing firms go beyond the kind of human-centric way of providing wealth management advice to kind of more hybrid or digital-only models. And some very innovative examples of those coming out now. And I think when you look at the organizations of the future, there are some which are just making the kind of existing organizations way more productive. And I think, you know, our original, I guess, mental model around that was almost taking, you know, the boxes on the org chart and replacing them with AI agents. I think that was probably a bit presumptuous. I think it's probably more around taking certain tasks that those individuals do and maybe getting agents in the mix in terms of carrying out some of those tasks. On the other extreme, we are seeing for those providers who want to really give advice at scale and start dabbling into experiences which don't have a human in the loop on the customer-facing side, we are seeing agentic versions of, you know, QA, compliance teams, execution ops teams, all that kind of stuff coming to the fore. And that's a really exciting space to be involved in.
Very fascinating. I think anybody who works in wealth management who will have, I think most of us will have colleagues who are agents, probably, maybe even bosses who are agents, you think, Vivek? Or?
I think it's difficult to say. I think there's a lot I can do that can be replaced by a very good AI agent, to be fair. But I think it really depends on the organization and how they're all set up, and also the existing tech stack. Like I think one of the advantages some of the newer players have is that just the way they're set up on far more modern systems. They can move a lot quicker. They can provide those AI agents with all the connectivity and the context they need to just be a lot more effective.
And data, consistency of data standards, absolutely. Because that's a massive issue in the advice space.
Yeah, and just also the internal culture, just for adopting the tooling, even within advice firms, and we work with hundreds of advice firms now. There's such a dispersion in the culture internally across them all, in terms of the degree to which they're adopting this tooling.
Can I say one thing? It's quite interesting if you look across the pond at the US. I don't know whether anyone's seen what Morgan Stanley have done on their advice side. So 15,000 advisors now use their advice. It's universal, like 98% adoption. Pre-meeting, like agents, pre-meeting AI. Then the meeting itself is obviously the high human touch, which we know is the critical. Then post-meeting, and then keeping in touch. And they've now moved to start deploying agents around opening accounts, execution, change of beneficiaries. So for me, that works quite well there. I mean, it'd be interesting in your guys' both views, because they are very vertically integrated. So they don't have any, data from about 100 different sources that they have to deal with, and they could, I don't want to say force the culture, but they can implement a cultural change like that. I think it is only a matter of time in our sector on this side that's coming.
Great example. Thank you. When we think about AI, we talk about agents, internal organizational changes to org charts, But we also have to think about the customer journey and how AI will improve, automate, enhance the customer journey. And you've heard a lot about the conversational interfaces and how conversational interfaces will actually change how we engage with customers across their wealth spectrum. And so I wanted to ask you all more what you see in your industry, in your companies. How do your conversational journeys change? How do you implement AI to make your customer journey better, easier, faster? Let's start with you.
Well, we've primarily had pensions clients, so large-scale financial institutions that take a very long time with significant governance roadblocks along the way. And they themselves have got very large employers as their clients, and so are extremely conservative, because even until we were acquired by Mercer, even if we got something wrong, if it went out into the public, it is their name, Marsh and Mercer, that will be on the front page of the Daily Mail, not some tiny startup that no one's ever heard of. So the issue is the cautiousness that exists and how to really overcome that. And what we've had to build is an entire system of evals, for everyone who's in AI, which is testing in a different way, but then also narrowing the content, which is quite difficult, because once you narrow content, the richness of that experience that customers are used to from the large LLM then starts to also disappear. So for us, we've made quite a lot of significant changes in that kind of technology, and it will be interesting for me once we see it deployed at the client level, what kind of response that is. But on the advice side right now, no one can complete a fully fledged advice transaction because of the FCA. I mean, there's a consultation now on simplified advice, and for anyone who's also in the audience, even on targeted support, which is the stepping stone, there's a pathway that's open. So if anyone is, you should really approach the FCA for that, because that's live and active, and then also give your input on the simplified advice side. But yeah.
I think thinking about conversational AI, I think we're kind of in that space where a lot of our products that we build are helping customers step through guidance and advice journeys, whatever their need area is. I think what we're kind of seeing is lots of people have already had a conversation with a ChatGPT or Claude and asked a lot of questions ahead of a conversation with an advisor, or even before that. So they're coming to it more educated, which is a great thing. But you can't use the output from a ChatGPT as regulated advice. I think the greatest deployment we've probably had with our internally is where we feel a bit more comfortable, where it's not client-facing, where it is actually facing an advisor, but the advisor is always accountable for the output. So things like file review modes, where an advisor would have that conversation, it would be transcribed, it would be matched to a fact find, and then the AI agent is supporting the quality uplift of a case, which then obviously improves the quality of the cases going through and faster cases. So we've got different use cases for it all, but obviously the accountability is still sitting with the advisor or the paraplanner in our model.
Yeah, I think we're at a really exciting point, actually, where I feel as an industry we will be able to build experiences that are of orders of magnitude better across the spectrum than they were, let's say, 3, 4, 5 years ago, where a lot of these advice type of journeys were quite linear. So you'd have to go through, a fact find and a whole bunch of screens. You could be quite smart about the way you'd ask questions and collect information and present recommendations. But the way you can do that now is so much more nuanced, so much more human. You can make it so much more personalized than ever before. And we're really excited at Multiply because we used to be direct to consumer. We had all these product challenges we continuously faced a few years ago, which we can now see chunk by chunk being solved by LLMs, by AI agents, by combining the best of what these models do with deterministic systems. And I think it's only a matter of time now, and I'd probably say months, not years, before we start seeing some really incredible customer journeys, conversational-based customer journeys out there in the market.
Exciting, Tamara. Yes.
And I wanted to actually add on that and share with you my experience over the last 5 years. So I launched my first venture 5 years ago, and I was passionate about democratizing the access to wealth management and investing services. So what we offered was front-to-back investing platforms to banks, brokerage houses that wanted to offer investing wealth management services to their end customers. And why we were growing massively from Southeast Asia to Brazil, my customers were able to convert less than 1% of their customer base in investors. So think about that. Less than 1% of people started investing and really, managing their own wealth. And the main problem was within the engagement layer. And we all talk about the lack of financial literacy. I think this is not the only thing. I think it's around financial confidence. So a very financially literate person will still might lack the confidence to invest. So I think what we are seeing now is that with the agentic AI, we can build a conversational interface to start engaging these people, something that we really failed to do as an industry, even from technology perspective for the last years, and we have been discussing that. And I want to give you an example. I launched now my new business really focusing on helping banks to convert savers into investors. And through conversational interface, you can start engaging with a person within 7 to 8 minutes. And the most important thing is you're trying to map their investor identity. I call it investor DNA. Each one of us is very different investor. And once you understand who we are, and not age, demographic, gender, but I talk about risk appetite, I talk about behavioral readiness, your confidence level, then we are able to personalize a user journey. And you're able then to map the need of that person to a specific product. So think about it. We as an industry, we have been selling products. We were trying to sell products to customers, packaging them as an advice. And now we should look at the outcome. So you know who this person is as an identity, as a DNA, and then you start mapping this personalized user journey. This is what we're currently doing at the moment. I am a big fan of targeted support, investing nudges. This is the way to go. I think the FCA set the golden standard in that space. But imagine that you can, I am dreaming of the moment when we are going to see the entire user journey executed, meaning that you talk to your agent, you decide where you want to invest, you feel comfortable with that, you tell the agent, execute my portfolio, and then you have a continuous loop of engagement with the agent of optimizing that portfolio. This is what I think we are going to see in the next 12 months in terms of the use cases, and this is how powerful agentic AI is in terms of conversions from savers into investors.
Excellent, Tamara. So we really at a quantum leap in our industry now. I think we came to this, and we talked about so far on the panel on the sector overall. We spoke about specific companies, specific opportunities in terms of reorganizing org charts internally, co-working with agents. And now, as a next step, I wanted, and plus we talked about AI, how to use AI across different functions in a wealth management wealth tech firm. Now I want to speak about one specific thing which is new to our sector, which is targeted support, which we spoke briefly, but didn't explain yet. So Phil, could I ask you to explain what it is and why is it new and what's the benefit for end customers?
I will do my best. I will do my best. A little bit of history, but I won't take too long. So there's been an advice guidance boundary review happening for the past couple of years, which is really largely looking at the guidance model, which is lots of information for customers, but often not really actionable for customers, versus the gap to full advice, which is suitability-based, individualized advice, the gold standard in terms of very, very personal to you. So through that advice guidance boundary review, something called targeted support came around, which is this to bridge this gap of this. Only 9% of the UK population ever get advice, and then therefore, really build a strong financial resilience. So targeted support has came in, which allows participating firms to apply through the FCA, use limited customer data to then start providing personalised, ready-made solutions for you. So it's a little bit like your people like you, in your circumstances, should invest in this particular fund. So it's really, really good in terms of how we're getting there. The great benefits of it all is it's digital, it's scalable, and it can be offered for free as well. So that's a great model that allows us to start reaching much more of the population and start helping people there. I think it's got it's in its implementation, which I'm really, really happy to say, because it went great on this. We launched our first targeted support journey yesterday in the Royal London mobile app. So that was great, and it was for ISA investment as well. So definitely in line with Tamara. But in order to get there when the rules went live at the end of December to where we are now, it requires lots of pulling together, bringing that data together from all of those old policy admin systems that you've got, as well as kind of offering them up in APIs and digital journeys, putting the calculations around plates, to get that enough data to start working out what is that ready-made solution for this? Is it right for all for those customers? So I say it's first journey, hopefully one of many moving into retirement planning next. But yeah, it's hopefully that's a little bit of an overview of what it is in terms of like bridging that gap between guidance and advice. But Tamara, do you want to add a little bit more to that as well?
Most probably, I just wanted to paint you a picture in terms of how do I see the investor education and the investor journey. So I talked to you about the conversion of savers into investors. And I think that that's the first part is how do you engage somebody who has never invested to start their first investment journey and then keep that person engaged into a continuous loop. And I think with targeted support, we are able to do that. We are able ultimately to keep investors now constantly engaged and driving to their user journey. So just to give you, on that first step of the engagement, let me just give you an example. We have been doing a lot of testing with savers. We were trying to understand what are the behavioral traits that were preventing them to start investing, whether it's fear, it's inertia. There is something that emerged, which I call it the safety buffer now. So people feel comfortable when they have specific amount of money into their bank account. And that's the safety buffer. And for me, it might be 20K, for somebody it might be 2K. But it's very interesting. There was this kind of behavioral trait of how do you measure that safety buffer. So now with that agentic journey and conversational interfaces, we are able to understand, okay, this is the safety buffer. These are the 2 or 3 blockers that person actually experiences in order to start investing. And then you can start building around that. So once you have converted the saver into investor, what I see as the next step of the evolution is to fall into a different kind of pattern of advice. This is what Vivek is talking about, and Phil, where you're receiving a holistic advice, I call it. And I consider holistic managing the entire household, not only one person, you as an investor, but your household. And then advice for me is everything around investment, retirement, inheritance, tax. So think about that. I think that should be the user journey that we should be building. And you have different players in the industry. So I am very much passionate of unlocking the retail capital. So I focus on that first initial step of converting savers into investors. But then you're having companies like Multiply and others where they're trying really to build that more holistic advice around households. Vivek mentioned something, a statistic that I didn't know, that at the moment only 2 million households in the UK are receiving advice. 9%, Phil said. How do we move that to 10 million? Because this is actually where we should be aiming to be. Beyond the initial activation, we should be aiming to actually have more households, more families receiving a holistic advice, which is not only when they're going to put their ISA, but it's about retirement, and this is touching to Felicia's point as well.
Fantastic. So I think everybody agrees with that. I think there's so much opportunity in front of us in our sector. And so if I can ask for closing words, Vivek and Felicia, from your point of view, what do you see most exciting in the next 3 years in our industry? What are you focused on and what do you expect? Felicia, if I start with you.
I think we'll move more from, we're currently product distributors in our industry, and I think we'll move to more the delivery of outcomes, which is quite a big jump. And I think, like Tamara is saying, the new wealth managers will not look like wealth managers. It will be weaved into your everyday finances or your everyday journeys.
Yeah, I'm really excited for a whole bunch of new entrants into the market, particularly those from, let's say, neobanks or some pension providers. I think they're doing some really interesting things. So we'll see, I think, a lot of innovation when it comes to those fundamental customer journeys. And I think we'll just see a general trend of like a lot more people getting the help they need. And that kind of default setting of people's finances going from like, it's generally crap and anxiety inducing to like being quite, being great. and I think we'll start really seeing that in the coming years.
Fantastic. I think this was a great closing, and I think everything what we all want for ourselves, we want for our industry, for all our customers, that everybody has got financial well-being as a realistic target, as a risk or an opportunity. And I would like to thank you all very much for sharing your knowledge, your expertise, so honestly with our audience today. And thank you all for joining our discussion. We really enjoyed it.